Hi, I'd like to welcome everyone to our webinar today. My name is Chelsea Simpson. I'm with the National Farm to School Network. Today's webinar, Debt Financing for Farm to School Enterprises, is hosted by the National Farm to School Network and presented by RSF Social Finance. This is a special webinar, but we do host a regular webinar series called Lunch Bites on the second Tuesday of every month. Each webinar in our series will feature a 20-minute presentation followed by a short Q&A. However, this webinar will last a full hour. Feel free to ask questions as you think of them during today's webinar by typing them into the chat window on your webinar control panel. We will take the questions at the end of the presentation, however. All of our webinars are archived on our website, farmtoschool.org, which is where you'll also find additional resources related to Farm to School, including links to Farm to School contacts in all 50 states. If you're new to Farm to School or have questions about food safety issues, local policy, or other general questions, please contact your state lead after today's webinar. While you're on our website, you can sign up for our email newsletters, which will let you know about future webinars and other events. We're going to go ahead and get started with today's presentation now, Debt Financing for Farm to School Enterprises, presented by Kate Danaher, who is the Senior Lending Associate for RSF Social Finance. And we also have Ted Levinson, the Director of Lending for RSF Social Finance, on the line, and Hana Johnson, who is the co-founder of Common Market Philadelphia. But Kate's going to start our presentation off today.
Thanks, Chelsea. Good morning, everyone, or I guess good afternoon for most of you. Thanks for having us. From what we understand, this is a different topic than you guys usually cover, so we're hoping that this will be helpful and might instigate some good questions. So I thought we would start with just talking about kind of the objectives that we want to cover today. First, we want to talk very briefly about what we perceive to be some of the major catalysts to instigating the farm-to-institution movement. These catalysts have really created opportunities for different types of capital to begin working in this space than traditionally has been the case. We're also going to spend some time talking about RSF's work and how we support different organizations that are trying to further supporting local farmers and getting local products into schools and institutions or institutional settings. And then Hana Johnson, who's on the call, who is the co-founder of Common Market Philadelphia and is also an RSF borrower, will dive into their organization and how they contribute to furthering the mission and the flow of local food into Philly-based institutions. And finally, we'll talk briefly about the challenges and opportunities that we see in the movement, both from the financing perspective as well as from the enterprise perspective. So first, to talk a little bit about what has kind of created the opportunity for groups like RSF to participate in this space. I'm sure that we all know, but traditionally school food has been funded and operated through the Federal School Meals Program. And with almost a singular funding source, the ways that these programs have been run, like including food procurement, has been really limited to the resources available to them. Hold on, there we go. So recently we've really seen an upsurge in market-based innovative models that are addressing the issues of both local food and increasing school food nutrition. And they come from what I think is really three primary sources. First is the need. Farm-to-school programs have been around since the late 90s, but we've really seen in the past 5 years, again, an upsurge in the demand and the identification of the problems that we are facing in this country. A lot of it was started or kind of catalyzed by Michelle Obama's Let's Move campaign that brought the issues of childhood obesity to the forefront and has done a lot to increase the public opinion on the topic and to get the government and policy motivated to make some more changes. As we've all probably seen the statistics, but 1 in 3 children are overweight or obese. The eating habits that these children adopt are formed at a really early age. And a good portion of those younger years are spent in school, and 1 out of 3 meals up until the age of 18 are pretty much consumed within school walls. There's also, from our perspective, it's a really interesting opportunity to get involved in this market. The school food program their budget is $13.3 billion a year on the school lunch program, And these meals almost entirely consist of agricultural surpluses and contracts with food processors. So a lot of schools will actually get, a case of raw chicken for $11, and then they'll send it to a processor to bread it and deep fry it for $23. So the economic savings and the nutritional losses really aren't matching up in the current system. So the need is there, and with programs like Let's Move from Michelle Obama and other farm to school programs, there's become a really sincere demand on the consumer end. A lot of parents and groups have kind of been, while we've known about these issues for a long time, have been waking up and beginning to really demand a change in the system. And at the same time, we are all probably aware that there's been an upswing in the demand for locally produced foods. The trend in consumer demand over the past several years has actually indicated that demand in the local segment is outpacing demand for organic, which is pretty astounding considering how quickly we've all recognized the organic sector has grown. This is both from a nutritional standpoint, but also from an economic development standpoint. People get that our industrial food system just is broken and consolidated and isn't working. While the average age of our farmers is approaching retirement, we don't have people to replace these local and regional growers. And so both of the demand for both better nutrition in schools and more locally produced foods has kind of grown in tandem, which has really created this opportunity. And then finally, it's policy reform. I think that we've actually seen, especially with the First Lady bringing childhood obesity and school food nutrition to the center of kind of the political ring, we have seen government and policy and regulators really react positively to wanting to make sincere changes. But again, policy reform just takes a long time. And I think that between the demand that we're seeing from consumers and the slow turnaround from policy reforms, there's been this opportunity and as an opportunity to create change from a market-based perspective. And so as a result, we've seen a lot of business models that have tried to attack these issues from a market-driven angle and beyond creating the conditions and market forces to support the work, including creating opportunities for different types of capital to play a role, where traditionally it's been grant funding or federal funding to provide lunches in schools. We're now having the opportunity as investors and lenders to participate in that movement. So a little bit about RSF Social Finance. RSF is a nonprofit financial services organization that is trying to essentially transform the way the world works with money. We do this in three primary ways. First, we have over 1,400 different investors that invest their money at RSF for a small return, but it's also a safe and highly liquid investment. They can pull their money out every 90 days if they need to, but they invest with RSF because of how transparent we are with that money. So with the money we get from those 1,400 different investors, we then re-lend that money to for-profits and nonprofits that are really trying to change their systems and make sincere social or environmental impacts in their industries. Finally, we also have, we won't spend too much time on this, but we have a donor advised program where foundations or individuals can gift their money to RSF and we'll essentially hold it for them until they decide how they want to re-gift that money into other nonprofits. So RSF, on our lending team, we lend money out through one of our three strategic focus areas. Those include food and agriculture, education and the arts, and ecological stewardship. So RSF, on the lending side, we are able to support funding into these three focus areas through two primary financial vehicles. The first is going to be our social investment fund, which is the majority of the work that we do. And it provides loans to nonprofits and for-profit social enterprises. The second is our what we call the PRI program, the Program Related Investing Fund. And it's a place where foundations that either don't have the overhead or don't feel like they have the bandwidth to run their own kind of mission-driven investment programs, they can put that money at RSF, and then we can make more charitable loans out to organizations. And this one is actually entirely focused on the food and agriculture sector. So it's important to distinguish what kind of loans we make, because it really dictates what kind of work we can do in the farm to institution space. And so we provide a lot of mortgage loans, construction loans, equipment loans like refrigeration, trucks, warehouses, and then finally capital lines of credit for working capital, which really helps a lot of our organizations pay the farmer before they get paid by a lot of schools or hospitals. So the Social Investment Fund, it provides loans, like I mentioned, to for-profits or nonprofits trying to really change their systems. There are a couple of things that we really look for. So these loans are somewhere between $250,000 up to about $3 to $5 million. And so as a result of putting that size money out, there's certain benchmarks that we look for in organizations that show that they're probably a good match for the type of funding that we can provide. First, we always look for the mission alignment, but also we need to know that organizations have strong, so we are a senior secured, I should back up for a second. We are a senior secured asset-based lender, and as such, as an asset-based lender, there needs to be strong collateral that is tied to the loan, such as a truck, refrigeration, a warehouse, a piece of land that allows us to collateralize the loan in the case of in the case of a default. There's a place that we can go to kind of recoup that money. We also want to see that organizations, so as a lender, most of our loans are paid back through the cash flow of the organization, and so it has to be a revenue generating organization. To carry a loan of greater than $250,000, we really are looking for organizations that have revenues greater than $1 million. And finally, when we're putting loans out there, our investors, part of the reason they invest at RSF is because we are a pretty sure bet that they're going to get their money back. And so we are looking for organizations that we feel have the track record and the experience to grow their mission and their organization. And so we're really looking at organizations that have 3+ years of operating history. So that is our social investment fund. And like I said, we do most of our work on the lending team through this fund. We also have the smaller fund that is the program related, hold on, wait for it. The program related investment fund. And so that fund is entirely for organizations that are doing extremely catalytic work in the food and agriculture sector. You'll hear from Hailey, but Common Market was actually one of the first recipients of a PRI loan from RSF. And those loans they're for $50,000 and up for similar uses like equipment, mortgages, capital lines of credit, things like that. But they're really designed to provide RSF the flexibility to make loans to organizations that are highly catalytic but maybe don't have the organizational maturity or the revenues that would match the other types of funding. So this is our ability to try and meet organizations that are doing good work where they are.
Hi folks, I'm Ted Levinson, the Director of Lending, and I'm going to speak with you briefly about three organizations that we've worked with to give you a flavor of the types of loans that we can offer. The first one that I'm going to speak with you about is a for-profit company headquartered in the Bay Area called Revolution Foods. We started to work with them in 2009 when they were operating out of a decommissioned fast food restaurant. When we first made our loan, they were delivering about 15,000 healthy lunches a day to public school children. And today, Revolution Foods has expanded into Southern California, New Orleans, Houston, Denver, Washington, D.C., and the New York area, and they're delivering over 200,000 meals a day. Our 7-figure line of credit to Revolution Foods helped them bridge that gap between when they had to make payroll, pay for their ingredients, and pay the rent, and when they got paid from their clients that were charter schools and public schools. As the company grew, their need for cash increased because that gap became too large for them to handle from internal cash. So that's a perfect example of the type of financing that we like to provide. The next organization I want to tell you about is a nonprofit. This one as well is headquartered in Northern California, although we lend throughout the US and Canada. Ceres Community Kitchen works with about 150 teen volunteers who take food, the majority of which is culled from Whole Foods or donated by food manufacturers, and they turn it into healthy meals that they deliver to people recovering from serious illness. Most of their clients are people recovering from cancer, and they get healthy meals delivered free of charge for 10 weeks while they're undergoing chemotherapy. So this is another example of a project that we support. In this case, we provided a 5-figure loan to Ceres Community Kitchen to help them buy the building where they were previously renting in Sebastopol, California. And lastly, I want to talk about another nonprofit, Hana Health. This is an intriguing example. It's a state-run medical clinic in a remote part of Maui, Hawaii, and it's a nonprofit. And behind the clinic is a 6-acre plot of land that was converted into an organic farm. Today, Hana Health generates about $1 million in revenue from the produce that's made at the farm, which is sold to locals, sold to tourists, sold to restaurants and grocery stores, but is also converted into value-added products that are sold right there in Hana. Our loan, a 5-figure loan, helped them close the gap to finish construction on a commercial kitchen on site where they were able to process more foods and obtain the health certification that they needed to sell to daycares as well. So these 3 examples cover the spectrum of nonprofits and for-profits, loans at the small end of the spectrum, loans at the big end of the spectrum, and they cover, in the case of Revolution Foods, a line of credit, in the case of Ceres Community Kitchen, real estate, and in the case of Hana Health, real estate and equipment. Now I'd like to turn it over to our good friend Hailey Johnston from Common Market, who's going to give you his perspective. Hailey, take it away.
All right, thanks, Ted. Again, I'm really happy to be here. My name is Hailey Johnston. I'm a founder and director of the Common Market Philadelphia. We are a nonprofit local food distributor connecting communities in our region with sustainable family farm food under the premise that all people deserve access to good food and everyone who grows that food deserves to be paid and treated fairly. As Kate and Ted mentioned, Common Market is a borrower from RSF Social Finance. What they did not mention is that both Common Market and my wife and myself, as well as several of our employees, board members, even our parents, are also investors in RSF, and so we're also really proud to be part of the investor community, just as much as we're proud to be part of the borrower community here. Oops. So Common Market effectively creates the link between local farms in our region and the institutional food service sector, among others. We buy directly from farmers in our region. We audit them with respect to their sustainability and labor practices, and we bring their food directly to the kitchens of hospitals, schools, universities, elder care facilities, some grocers, and growing cadre of faith-based organizations as well. We are effectively the only link between the farmer and the institution. And over the last several years, we have provided farm-to-institution services for almost 100 schools in our region, and that includes Pennsylvania, South Jersey, and Delaware. 65 of those schools were public schools in that time, along with some private schools and some colleges and universities. For us, as a 5-year-old social enterprise focused on expanding access to good food, we saw institutions as the critical place where we could grow our impact for both our farmers and our target consumers in as quick a way as possible. So reaching as many of these school-age kids who, as Kate mentioned, get many of their calories from their school meals, for us seemed like a perfect strategy for expanding impact and having significant order size to meet the needs of our growers. This is just a little diagram that kind of shows our model. We aggregate food, driving out to the farmers. Some of the farmers also bring their product to us. We assemble orders and then distribute out to our partner institutions and organizations throughout the region. Currently, we're working with almost 80 farmers in the Philadelphia region within 150 miles of Philadelphia and distributing to nearly 200 customers. So again, collecting this bounty that has grown in our region. This is actually a photo from the Leola produce auction. Giving farmers new markets and new opportunities for to increase their income and the viability of their farms. Again, another photo of the beautiful produce grown in our region, bringing it into our warehouse, aggregating, packing orders, and sending it out through our trucks to the kitchens of the institutions in our region that serve the most vulnerable communities. I want to speak briefly about the role that debt financing has played in the development of our organization. Again, we will be, actually we'll hit our 5-year birthday in a few months in July, which is really exciting for us. Common Market, though, was initiated around the middle of the last decade. We, as a group of advocates and community members and nonprofit and for-profit organization operators, came together, and we saw an opportunity that was created by the Commonwealth of Pennsylvania, which is called the First Industries Grant Program. This was a bond issue that the Commonwealth put in the marketplace to generate grants and loan guarantees for projects related to agriculture and tourism, which Pennsylvania claims were the initial industries in our state, as well as right now the largest 2 industries. We were granted a $100,000 planning grant, which also made us eligible for a loan guarantee should we, at the point at which we proved that our concept was viable. And again, at that time, we were looking at how we strengthen our agricultural communities, simultaneously strengthening our urban food insecure communities. And so our solution was to recreate this infrastructure and develop relationships between these two regions. Once we decided in 2008 that our concept was viable, we had completed our business plan, we actually worked with a Pennsylvania-based CDFI called the Reinvestment Fund, which many people might be familiar with, their work related to the Fresh Food Financing Initiative, among others. The Reinvestment Fund was able to provide a revolving loan for our receivables, utilizing that 50% guarantee that came from the Commonwealth bond issue. Around 2010, maybe even a little before that, that $60,000 revolving line of credit through TRF was not sufficient to keep pace with our growing operations. Effectively, what we used that line of credit for, similar to the way Ted described their line with Revolution Foods, we were selling to schools and other institutions. Farmers wanted to be paid within 7 to 14 days. Many of the institutions we served had much longer payable terms, and so we needed a way to bridge that gap, which we did, I think, quite successfully for a time, but as we grew, it became more challenging. RSF came in with what was new to them and certainly new to us at that point, with a program-related investment, a similar-looking product, but an expanded amount. They bought out that line from TRF. which as our organization grew and our relationship with RSF grew, expanded to about $350,000 in 2011, and it was expanded to that number really to meet our growth projections. The good news is that while we continue to grow as an organization, we've become much better at collecting money from our partner institutions. It's far that not quite as great as we anticipated. As we grew, we had the great benefit of incubating at the Share Food program here in Philadelphia, and as we grew, the facility became the greatest bottleneck to our operations. So it took us almost 2 years to find a new facility, and in the process developed, I think, a stellar relationship with RSF Social Finance, to where when we found the right building and as we got deep into the conversation, RSF became comfortable with making a much larger loan and investment in Common Market. At that time, actually, was when myself and our organization and our community as well were called to become investors in RSF. And part of our investment was to show commitment and dedication of our community to our work, and to put a little skin in the game as well. So we're proud to be investors, and it was part of the creative loan package RSF put together for what was a $1.7 million development project, which included the build out of coolers and repairs for the building, acquisition of the building, and everything else to bring Common Market's scale and handling practices up to a point where we can meet our growing demand, and especially the food safety and handling concerns of institutional food service. So just to kick off opportunities and challenges, and I think one of the challenges that we faced in working with schools in particular, institutions more broadly, but schools in particular, was with a school district here locally in our region. We began to face challenges collecting the money that was due to us for food that we had sold to them. The way our receivables line of credit works is there's actually a fairly creative formula that determines whether our receivables have aged beyond a certain point, and we're able to collect 75% of those receivables. Well, with this particular school district, the receivables began to grow and age and grow and age and grow and age well beyond 2 months, well beyond 6 months, and I'm afraid to say even beyond a year. It was working with, and I think only because we were working with such a creative and flexible, mission-driven lender like RSF, that we went to Ted and said, hey, listen, serving the school district is core to our mission. This is exactly who we want to get our food to, but their operations, effectively their payable terms are making it very difficult for us to do business. And Ted was able to say, hey, listen, we can relax our formula a little bit just for this customer, because it's the school district, because these are the kids that need this food the most. So while what would have otherwise been a really challenging situation for an organization like ours, or one that had been in had a less strong financial position, actually became possible for us to have the flexibility to serve this larger district with financial challenges. So again, this is, I think, a great opportunity in why working with a CDFI or a social lending institution, but more broadly a mission-driven lending partner like RSF has created the opportunity for success for a small local foods distributor like ourselves. So with that, I'll pass it back to the RSF team.
Thanks, Hailey. So I just wanted to touch briefly on, oops, sorry. Yeah. So I wanted to touch really briefly on some of the opportunities and challenges that we see as lenders, and what we see as challenges to just the folks that we work in this space with. So a lot of the challenges to working deeper in this space are very much related to the inherent mismatch between the type of lending that groups like RSF offers and just the nature of the school food system. The school food system has almost entirely been dependent on subsidies, not revenue generating models. And while a lot of that's changing and we're seeing a lot of movement, it's still very much in its infancy. So when a group like RSF provides a loan, it's just the way that we do business. We have to be working with an organization that's either generating revenues that can pay back the monthly payments on the loan, or if they're a nonprofit, they're bringing in consistent and reliable funding streams that make us feel comfortable that they can pay back those loans. We're also looking for organizations that, as I mentioned before, have strong physical assets to collateralize the loan in a worst case scenario if we have to figure out how to recover some of our money. And finally, for a lender to feel confident that their loan is going to get paid off, that their loan is going to be able to get paid down, and then in turn be able to pay our investors back that rely on that return, we're looking for organizations that have a track record of several years. And so I think all of that to say that where we are right now, while we've found some really amazing organizations to work with, like Common Market, there's not so many of them yet. Most of the organizations that are seeking funding in this space now either don't generate the revenues or the consistent grant revenues. A lot of them are still very much subsidized lunch programs that just make it difficult for us to work with. Or they are young enterprises that are at too early of a stage with an unproven track record. So while we've identified a lot of opportunities and folks like us are really excited to be working in this space, there's still a lot of just inherent barriers for that working relationship to continue growing. On the other hand, we do see a lot of opportunities. I mean, over the past 5 or 6 years, there has been a lot of momentum, both from consumer demand and the market side, as well as policy and regulations actively changing in favor of supporting local and nutritious food and getting that food into institutional buyers. And so we're seeing a lot of enterprises moving into the market that at the moment might not be a great fit for more traditional lending, but we're really excited to see how this space grows in the next 5 to 10 years, because someday they're not going to be too young, or policies are going to find new and innovative ways to work with kind of market-based approaches. And so we're actually very excited to see the field grow and think that there is a tremendous amount of opportunity to really change and catalyze the change in the school food system, and to support local farmers and local producers. So I guess that in the end, it's just, lending is not necessarily a risky business. And while groups like RSF and other social finance organizations might have a bit more flexibility and can take some more perceived risk every once in a while, it's still very marginal. And so we need to be working with a lot of organizations that have the revenue generation and have the track record. And really, for us, it's just a matter of time before we see a lot more of those. So with that, I wanted to say thank you so much to Hailey. Thank you to Chelsea and the Farm to School group, and ask you guys if you have any questions.
Thanks so much, Kate, Ted, and Hailey. That was a really great presentation. We do have some questions coming in, and I want to encourage other attendees to continue and write in your questions as we get started. If you have a question that doesn't get answered during today's webinar, feel free to contact any of our speakers. Their information is there on the screen. And you can also, whoops, sorry about that. Looks like we closed out our slide here. You can also contact the National Farm to School Network at info@farmtoschool.org if you have any really farm to school specific questions. But I'm going to get started today with some of the items that have came in. Oh, and just a reminder that today's webinar was recorded. So if you missed the beginning, you should be able to view that later on our website. I have a question for Hailey. Someone wants to know what the total revenues are annually for Common Market.
Sure. This year, Common Market will sell about $2 million in locally sourced, sustainably produced food. And we've been growing, this this will be our 5th year of operations. We've been growing at a pretty significant clip since that first year when we sold about $125,000 worth.
That's great. Here's a general farm to school question. A person wants to know, says, in my region, people are trying to make the farm to school connection, but they're getting some pushback from people who are entrenched in the status quo. Has anyone else experienced that? I think that that is a pretty common frustration sometimes, not just in farm to school, but in any situation when you're trying to create some social change. But I would encourage you to send an email to info@farmtoschool.org, and I'd love to connect you with some state resources where you might be able to get some help with that issue and some other advice. Here's another question. How can RSF work with a company that is 3 years old and working in farm to school programs but does not meet all the criteria? How can we develop a working relationship? I'll just say that again. How can RSF work with a company that is 3 years old and working in farm to school programs but does not meet all the criteria? I guess the question is, how can you grow into a program that that will fit RSF criteria, I think is this question. And
Sure. So we have found that a majority of the borrowers that we work with, we've gotten to know over time before we lend money to them. So we're always following a couple dozen nonprofits and for-profits that are either too small, too young, not profitable enough, or don't yet have a need for a loan. And that's part of our effort, is to stay engaged with these organizations that aren't yet ready to borrow from RSF, so that when they do reach our thresholds, we'll be able to, we feel like we already know them, have a relationship with them, and are in a better position to approve a loan without too much delay. So we encourage people to reach out to us, in particular to Kate here at RSF, to discuss their organization and where they meet our criteria and where they fall short. I'll also mention on our website we have a pre-application which takes all of 3 or 4 minutes to complete, which is a great way. We'll follow up the next day with you folks, but it's a great way to review the questions that we ask and to help you think about what where your organization currently stands. So we encourage everyone to start that process by filling out our pre-application on our website.
You know, I want to comment to that as well, because I think Common Market was very much in that same space when we first initiated our relationship with RSF. And I think one of the important things for you to do as an organization is to recognize what their criteria are, as well as be really focused on your planning and having a feasible business plan that demonstrates how your current activities and the investments you're making in growth are going to bring you to that place where you are a bankable enterprise. For us, it wasn't our first outreach to RSF where we were able to bring in funding for our work, but it was after several years, after building our own capacity and demonstrating that we were on the path to sustainability financially.
Hailey, we're getting a little feedback on your audio. It's kind of cutting out a little bit. I'm not sure if there's anything you can do on your end to adjust it, but just wanted to let you know it sounds like it's cutting off when there's some typing happening. So it could also be one of our other panelists if everybody could keep an eye on their mute buttons. Just wanted to let you know. But thanks for the great answers from both of you.
So this is Ted, and I want to respond to a written question that we got asking if we could describe what the average borrower of ours, what the split is between product sales and grant funding. And they range from 100% product sales, which is where every one of our for-profit borrowers falls, and that they make up half of our $80 million portfolio, all the way down to nonprofits that where their overwhelming majority, 80% plus of their budget, comes from grant funding. what we're looking for, regardless of whether it's earned income or donated income, and by the way, I think that if you've ever been involved in fundraising, you've earned that fundraising just as much as selling a product. But either way, we're looking for consistency. So what we're looking for are organizations that are either selling to reputable and a steady stream of clients that buy from them on a regular basis and pay their bills promptly, or if they're more financed through grants, we're looking at organizations that have a long track record of consistently being awarded multi-year grants from foundations, or that have broad individual support. When I think about our portfolio, one of our borrowers that does the best job of consistent grant revenue earns most of its income by charging members' credit cards $10 every month. And they have thousands of members who agree to these charges, and that's a very predictable stream of revenue. So we're more focused on how concentrated that revenue is, and how, which we don't like to see. We like to see wide spread customer base or donor base, and we like to see a very consistent customer or donor base.
That's really helpful, Ted. Thanks for weighing in on that. Here is another question for you and Kate. Someone says, can you please speak a little bit more about the additional resources offered by RSF beyond the financing? For example, access to official and unofficial mentors, connections with other Lindies doing similar things in other regions, etc.
So I have some bad news. There isn't much that we offer beyond money. Thankfully, a lot of people like the money, but we are not in a position. We're a social enterprise. We earn over 90% of our own operating budget is through earned income that we earn through our loan program, and we don't have the capacity to offer the technical assistance that other organizations do. So we focus on working with those organizations that are have the capacity to borrow and repay money. And we recognize that that leaves a lot of people out in the dark, but we believe that there are other individuals and organizations that are addressing this. We're here to fill the financing gap. We don't have the expertise or the staff or the budget for us to provide the technical assistance, which we recognize is so critical.
And this is Kate. Just to add to that, there are some great groups out there that are providing technical assistance, and while we don't have the bandwidth for it, I think that part of that question was also targeted at what are the benefits of having a relationship with RSF. And maybe Hailey, I don't know if Hailey can speak to this, but I think that a lot of the value that our borrowers get working with RSF is once you're in the relationship with us, it's one of our core values to have transparent, meaningful, long-term relationships with our investors, our borrowers, our donors. And so we do have a wide network of folks that support our work, and we do our best to make sure that the people that are borrowing money from us are being worked through our network. We spend a lot of time, hosting brown bags and letting people know who we're working with, because we're really proud of the organizations in our portfolio, and we like to show them off. There are never promises that come with that, but I think that if you ask a lot of our borrowers, a lot of the value is in the relationship that you have with RSF once you enter a lending relationship.
Yeah, I would definitely echo that. Our experience as an organization has been that once we've become part of the RSF community, and it really is a community, that it's opened up a tremendous amount of other relationships with individuals and organizations all around the country and in the world to some respect. I do think, I think Ted's answer was correct in that they formally don't provide any additional technical assistance or connections, but I think as organizations are sort of beginning that relationship building with RSF, sometimes they are plugged into other organizations that are having success in that field, and I know that RSF has connected us with lots of other folks who are burgeoning distribution enterprises in different places around the country, and we've provided some technical assistance to them. And specifically in response to another question that was typed in, resources around business planning. That's kind of one of the things that we like to help other new distribution enterprises look at. And we've posted and shared openly our business planning and feasibility study with other organizations. And so if you just Google search Common Market Philadelphia and business plan, you will find it out there on the internet.
Okay, our next question is, given that PRIs aren't a good fit for most nascent businesses, what other financing models could more effectively serve the growth of newer businesses?
I guess that I would respond with another question: what type of organization you are. So PRIs are a good fit. So our PRIs are directed to for-profits and nonprofits. The use of those funds has to be for what we deem kind of charitable uses. A working capital line of credit allows folks like Hiley or a couple of other borrowers of ours to pay their farmers in 7 to 14 days when they don't get paid for 30. That is core. That is central to their mission, because you have to develop strong relationships and a lot of trust with your farmers when they're your supply. We've seen some other things that have been popping up in the food and ag space. We've been seeing some organizations that are getting more creative in terms of providing royalty financing. A lot of young food and ag organizations don't necessarily have the revenues to support monthly interest and principal payments. So royalty financing allows them to have some delayed payments and then to pay down that principal and interest as the organization ramps up its revenues. So there is some more creative financing happening for the earlier stage kind of food hub groups. And if somebody does want to get in touch with me directly, I'd be happy to have a longer conversation about that. But there are people out there getting creative.
Our next question comes from someone in New York City who says, I've recently been given an acre of land near Jacksonville, Florida. My interest is in using this land to farm, provide educational farming opportunities, and provide fresh produce for sale, particularly to schools. What's your advice for getting started? And I'm guessing that this person is interested in advice for getting started with the financing process. Probably there's probably not a lot of deep farming resources here on our panel today. But do you have any advice?
Sure, I do. There are several things that you can do now to make yourself a better candidate for financing in the future. So obvious things to do are to incorporate as soon as possible with the Secretary of State in whatever form you choose, whether that's an S Corp, a C Corp, a nonprofit, or an LLC. That will date your organization, so that will get you to that 3-year mark at a faster clip. You'll want to open a bank account under the name of the new corporation as well, and put a few $1,000s if you can afford it into the account, because that will show again, date the organization. And then as much as possible, you want to borrow money and repay it. And although RSF is pretty picky about who we lend money to, you might be able to start with something as simple as leasing a single laptop through Dell, where you might pay $36 a month, and then you'll have a track record of having borrowed and repaid corporate debt. So all these things can help you today to prepare for being a candidate for financing from RSF or other lenders at a later date.
That's great advice, and kudos to that attendee for thinking that far in advance. Here's a question that I was actually wondering myself as an individual, and that's, what size of investments are people making into RSF? For example, Hiley mentioned he and his wife and other people at Common Market. Can you talk a little bit about the investing size? Is there a minimum?
Sure, there is a minimum. Today we have over $80 million of investor money, and that money comes from 1,500 people in the US and Canada. The minimum investment is $1,000. And I always like to say that, don't worry, there is no maximum. So our average investor has about $50,000 with us. Today, we pay an annual rate of return of a whopping 0.75%. Sadly, that's more money than you can get with a CD, and you're making a 90-day loan to RSF. It's just like a 90-day CD. If you don't ask for your money back at the end of 90 days, it's rolled over for another 3 months. Our average investor stays with us for about 6 years, and we have loads and loads of investors that have opened accounts with $1,000 or just a little bit more. One of the things that we're very committed to is to providing an option for people of modest means to be impact investors. And so we love the multi-million-dollar accounts, but we're also very grateful for the $1,000 accounts, because we are ultimately trying to transform the way the world works with money, and you can only do that when you reach out to people and have a personal relationship with them. And at $1,000, we think that the bar is pretty low to be able to participate in lending money to pretty cool organizations like Common Market, like Ceres, like Hana Health, like Revolution Foods, and maintaining our track record that started when we started in 1984 of always returning principal and interest to our investors. So you not only get to participate in some pretty cool impact investing, but you have the confidence of knowing that your money is secure.
That's fantastic. I might bring your investor average down a little bit, but I'm definitely going to look into that.
We will gladly take new investors. The staff here at RSF can open accounts with only $25 out of our paycheck every 2 weeks, and everyone here at RSF is an investor as well.
I'm sure. That's awesome. Well, I think we've reached the natural end of our question period here. We've had some great questions and certainly great presentations today. I just want to thank everyone who joined us as an attendee, and especially to thank Kate, Ted, and Hailey for their fantastic presentations and really solid information about debt financing. Like I said, I encourage everyone who wants to look into this more to note the information on the screen. And thanks for joining us.
Thanks so much, Chelsea.
Yeah, thank you.
Bye.